An African currency just became the best performing currency in the world. Not the South African rand, not the Moroccan dirham, the Zambian kwacha, the same currency that was collapsing just a few years ago, the same country that defaulted on its debt in 2020 and became Africa's first pandemic-era casualty, the same economy that saw its money lose more than half its value in a single year. By late 2025 and into early 2026, the kwacha gained almost 10% against the US dollar in just over a month, making it the top performer among all currencies tracked by Bloomberg. In October 2025, it rose 23% year-to-date, the most of any African currency. This is the kind of reversal that doesn't happen by accident, and it didn't happen because the US dollar suddenly collapsed or because Zambia discovered oil overnight. It happened because of decisions, discipline, and a very particular set of conditions that turned what looked like a permanent crisis into something much more interesting. To understand why this matters, you need to understand where Zambia was just a few years ago. In November 2020, Zambia became the first African country to default on its debt during the COVID-19 pandemic. They missed a $42.5 million payment on a Eurobond, and that was it. The country was locked out of international markets. Credit rating agencies downgraded them to restricted default. Foreign reserves dropped to barely 2 months of import cover. Inflation hit 15.7% by the end of that year. The kwacha lost over 50% of its value against the dollar in 2020 alone. People couldn't plan. Businesses couldn't import. The currency became a symbol of how far things had fallen. This wasn't a sudden collapse. It was years in the making. Zambia had borrowed heavily starting in 2012, issuing 3 Eurobonds totaling $3 billion between 2012 and 2015. They took on Chinese loans for infrastructure. They expanded public spending. By 2017, the IMF was already warning that Zambia faced high risk of debt distress. Then copper prices, which drive 70% of the country's exports, became volatile. A severe drought in 2015 knocked out hydroelectric power and crippled agriculture. When COVID hit, export demand collapsed, revenues dried up, and the government had no room left to maneuver. By 2020, public debt had surged to over 100% of GDP. The default wasn't a surprise. It was inevitable, but here's what's different about what happened next. Zambia didn't try to deny the problem or kick it down the road. In February 2021, they applied for debt restructuring under the G20 Common Framework. They brought in the IMF. They started negotiating with creditors. This was a long, painful process. It took almost 4 years. China, as the largest bilateral creditor, co-chaired the official creditor committee with France. There were disagreements over comparability of treatment, meaning private bondholders and official creditors argued over who should take bigger losses. In June 2024, over 90% of Eurobond holders finally accepted a restructuring deal on $3 billion of bonds. Then, in September 2024, Zambia reached a $1.5 billion restructuring deal with 2 major Chinese state-owned banks, China Development Bank and Industrial and Commercial Bank of China. By late 2024, the restructuring process was essentially complete. This mattered not because debt disappeared, it didn't, but because credibility returned. Investors started to believe that Zambia was serious about fixing its finances. That belief, that shift in confidence, is what moves currencies more than anything else. Confidence doesn't come from headlines. It comes from actions that investors and traders can see and verify. Zambia tightened fiscal discipline. They reduced the deficit. They started controlling spending. The Bank of Zambia raised interest rates aggressively in early 2024, hiking the policy rate to 14.5% to crush inflation. They increased reserve requirements for commercial banks to tighten liquidity. These weren't popular moves, but they worked. Inflation, which had been stubbornly high, started falling. By October 2025, it dropped to 11.9%, the lowest level since August 2023. By November, it fell further to 10.9%. That's still above the central bank's target range of 6 to 8%, but the direction mattered. People could see prices stabilizing. Businesses could plan again. And when inflation falls, a currency doesn't have to lose value just to keep imports affordable. That changes everything. At the same time, something else was happening in the copper market. Global demand for copper surged, driven by the transition to electric vehicles, renewable energy infrastructure, and power grids. Copper is essential for batteries, wiring, motors, solar panels. Countries that produce copper suddenly found themselves sitting on something the world needed desperately. Zambia is Africa's second-largest copper producer and one of the top producers globally. In the first quarter of 2025, copper production jumped 30% compared to the previous year, reaching around 224,000 metric tons. Major mining operations like Konkola copper mines and Mapani copper mines ramped up output. Export earnings from copper climbed. In October 2025, refined copper export earnings surged by over 31% in a single month. Here's the key part. When Zambian companies export copper, they get paid in US dollars. Those dollars flow back into the country. Mining companies need to convert some of those dollars into kwacha to pay workers, buy local supplies, cover taxes, and fund operations. That means they're selling dollars and buying kwacha. When more dollars are being sold than bought, the kwacha strengthens. It's basic supply and demand, but it only works if the government doesn't interfere. This is where the Bank of Zambia made a critical decision. They let the market work. In the past, central banks in Africa often tried to defend exchange rates artificially by burning through foreign reserves or imposing capital controls. Zambia didn't do that this time. They allowed the kwacha to appreciate based on actual dollar inflows, not artificial intervention. In December 2025, the central bank even issued a directive that curbed the use of foreign exchange for certain domestic transactions, pushing companies to swap more dollars for kwacha. That directive triggered a rush to offload dollars. Traders and corporates scrambled to convert foreign exchange into local currency to settle tax obligations and fund operations. The kwacha jumped nearly 4% in a single day in early January 2026, its biggest one-day gain since October 2023. By mid-January 2026, it had gained almost 10% against the dollar since the start of December 2025, the most of any currency tracked by Bloomberg. It reached a fresh 2-year high, trading as strong as 20.1 per dollar. This wasn't a fluke. It was the result of consistent policy, rising export revenues, restored confidence, and a decision to let the currency reflect real economic conditions instead of trying to control it artificially. To understand how rare this is, you need to know where the kwacha was before. In 2015, it fell 42% against the dollar, one of the worst performing currencies in the world. In early 2024, it dropped to a record low of around 28 kwacha per dollar. It had been sliding for years, then it reversed. By late 2024 and into 2025, it rallied 23%, making it Africa's best performing currency. By early 2026, it became the world's best performer. Currencies don't do this unless something fundamental has changed, and something did. Zambia reduced its dependence on the dollar inside its own economy. They improved foreign exchange management. They required exporters to repatriate earnings more consistently. They increased transparency around forex transactions. They communicated policy decisions clearly and predictably. All of this reduced panic behavior. When businesses and individuals trust that the exchange rate reflects real market conditions and not arbitrary government decisions, they stop hoarding dollars. They stop rushing to convert their savings. The fear premium disappears. And when the fear premium disappears, the currency stabilizes and can even strengthen. But a stronger currency isn't automatically a victory. It creates its own risks. Zambian exporters, especially in copper, now face pressure. A stronger kwacha means their products become more expensive for foreign buyers when priced in dollars. If the kwacha keeps rising too fast, mining companies might struggle to compete with producers in Chile, Peru, or the Democratic Republic of Congo. That could hurt export volumes, reduce dollar inflows, and eventually reverse the currency gains. There's also the risk of short-term capital flows. Some of the kwacha's strength might be driven by speculative investors chasing returns, not long-term fundamentals. If those investors pull out suddenly, the currency could swing the other way just as fast. And there's the temptation for governments to defend the currency artificially. if it starts to weaken again. If the Bank of Zambia tries to hold the kwacha at an artificially strong level by burning reserves or imposing controls, they'll repeat the mistakes of the past. Balance matters. The goal isn't to have the strongest currency. It's to have a stable, predictable currency that reflects economic reality. That's what allows businesses to plan, investors to commit, and industries to grow. What a stronger, stable currency can unlock, if managed well, is real economic transformation. Lower inflation uncertainty means businesses can forecast costs and revenues more accurately. Investors gain confidence that their returns won't be eroded by currency collapse. Machinery and equipment imports become cheaper, which is critical for industrialization. Zambia has spent decades exporting raw copper. A stable currency, combined with policy support, could allow them to move into copper refining, wire manufacturing, battery components, and other value-added products. This is where the real jobs are created. This is where economies diversify. This is where countries stop being at the mercy of global commodity price swings. But none of this is guaranteed. A strong kwacha creates opportunity, not outcomes. The government still needs to invest in infrastructure, skills, energy, and regulatory reform. They need to maintain fiscal discipline. They need to avoid slipping back into excessive borrowing. Copper prices won't stay high forever. When they fall, the dollar inflows will shrink, and the pressure on the currency will return. The question isn't whether Zambia can keep the kwacha strong forever. The question is whether they can use this moment to build something more resilient. So is this a temporary spike or a long-term turning point? The honest answer is that it depends. The fundamentals are better than they've been in years. Debt restructuring is largely complete. Inflation is falling. Copper production is rising. Policy credibility has improved. The exchange rate is being managed more sensibly. But the risks are real. Global copper demand could slow. Mining output could stall. Political pressures could undermine fiscal discipline. Short-term capital could reverse. The drought that hit Zambia in recent years could return and increase dependence on food and energy imports, draining reserves again. The kwacha's surge is real, but it's fragile. What other African countries can learn from this isn't that a strong currency is the goal. It's that currencies follow fundamentals. They follow productivity, export capacity, fiscal discipline, inflation control, and credible policy. They don't follow promises or slogans or rankings. Zambia didn't strengthen its currency by wishing for it or manipulating it. They did it by fixing the underlying problems, letting markets work, and sticking to painful reforms even when it was unpopular. That's the lesson. Not the surge itself, but the conditions that made it possible.